So today we're talking about these topics: using crypto loans to spend, utilizing tax-free thresholds, gift and donating crypto. Before we jump in, it's really important to note that tax rules are constantly changing. We do our best to keep up to date with the latest guidance. This video is general information only and is not tax advice. So please speak to a qualified professional if you're looking for tax advice. Hello, my name is Nelly and welcome back to another video. Thank you so much to everyone that left a comment in part 1. If you haven't seen that part, I will leave it down below in the top right corner of this video. So today we're talking about 5 new ways to legally reduce your tax bill. So today we're talking about these topics: using crypto loans to spend, utilizing tax-free thresholds, gift and donating crypto, investing in a IRA, and then take profits out strategically. If you're interested in learning how crypto is taxed in the US specifically, I will leave that video down below, so definitely check that out. Okay, number 1, we're talking about getting a crypto loan. So are you someone that's low on cash or contemplating cashing out some crypto quickly? It's a great way to get an ejection of cash when you need it, but it will come with a tax bill. To lower your tax bill, consider a crypto loan. You can put your crypto up as collateral to get cash when you need it and pay back the loan over time, so you never cash out your crypto. The IRS hasn't given any guidance as to how crypto loans are taxed, as you don't receive any tokens in exchange for your collateral nor dispose of your crypto. Taking out a loan may be viewed as a non-taxable event. It's a way to get cash flow when you need it without giving up any of your hard-earned gains to the IRS. You should, of course, calculate the interest rate for your repayments to ensure this is worth it for you in your personal situation. If you'd like to learn more about how crypto loans work, I'm working on a video, but for now, I will also leave a guide down below. Okay, moving on to the next topic: utilize tax-free thresholds and deductions. The IRS offers many tax deductions and credits to US taxpayers, so make sure you know which ones you can use and make the most of them to reduce your tax bill. So you can either take out a standard tax deduction, or you can itemize your deductions instead, but you cannot do both. This means however you're filing, you'll pay no income tax on the amount listed above. The standard tax deduction is processed faster by the IRS, which is why many taxpayers opt to use this. However, there are many other tax deductions available, so if you qualify for several of these, you might be better off itemizing your deductions in your tax return instead. There are hundreds of these deductions available, and thanks to the Tax Cuts and Jobs Act, there is not a limit on the amount of itemized deductions that you can claim. These itemized deductions change each year, so make sure to check out our guide for the most up-to-date information. As well as the tax deduction above, those on a lower income won't pay any capital gains tax on short and long-term capital gains. So on the screen before you, I've left the implications of this for single taxpayers, married taxpayers filing jointly, and then lastly, if you're the head of a household. American taxpayers enjoy an annual $17,000 for 2023 in gift tax exclusion, which applies to each person who you give a gift to. Gifts valued at more than $17,000 would potentially be subject to gift taxes of 40%, but only if you're over the lifetime gift tax exemption of $12.92 million. By gifting cryptocurrency, you can dispose of crypto without creating a capital gains tax event. You can also donate crypto and reap the tax benefits. When you donate crypto, you'll get a deduction worth the full value of your crypto, including any capital gains, provided the charity is registered. And in the United States, you can check a charity's 501c3 status with the IRS exempt organization database. That was a lot of words, wow. A charity must have a 501c3 status if you plan to deduct your donation on your federal taxes. Small note here, you'll need to report any donations in Form 8283. If the value of the donated property exceeds $5,000, the donor must get a qualified appraisal for contributions of property. Okay, moving on into the next topic, we're talking about investing into a IRA. So one of the most effective strategies to optimize your tax position is to invest as a part of a retirement, pension, or an annuities investment. And we've got a complete guide on the best Bitcoin IRAs and how they work, as well as a guide on different tax benefits of each type of Bitcoin IRA. But in brief, an IRA is a self-directed individual retirement account. And depending on the kind of crypto IRA you choose, you'll get a significant tax break. So traditional IRAs contributions are tax deductible, so you can reduce your tax bill by deducting your IRA contributions and pay no tax until you withdraw your funds when you're potentially in a much lower tax bracket, as you'll probably be when you retire. Meanwhile, contributions to a Roth IRA aren't tax deductible, but you'll pay no tax when you withdraw your funds later on. Okay, the last one is pretty straightforward, but I think it's still valuable to bring it up. Take profits strategically. So if you do have the luxury of time on your side, you can always try and wait out a lower tax rate, whether that's the HODL long-term, switch jobs, or even if you know you're moving to a lower tax state, holding off on realizing your gain until a lower income year can definitely pay off big time. But that is the end of this video. I hope you enjoyed 5 more ways to reduce your tax bill legally in 2023. If you have any comments, questions, concerns, leave them down below. Make sure to drop a like and subscribe for more crypto content. I'll see you next time. Peace.